Alrighty, so I wanted to give some more examples of using that strategy that I used before to enter into trades. On the comprehensive day trader beginners video that I recorded, I gave this example of price going above this relatively equal high and reversing down. That would be our first step. Our second step was a fair value gap right here. And then our third step was a break of structure, which was price coming down and showing us it wants to stay beneath and it wanted to reverse. I would take my trade up here. Let me hit a replay so that you can see it accordingly. So let's say price reverses down. That's step number one. That's liquidity. Then step number two is going to be fair value gap and or break of structure, whichever one happens first. So break of structure happens once this candle comes down. Once this candle comes down, this previous down candle or this swing low here gets taken out with a new candle that's closed underneath it. So that's step number two. Step two, break of structure. And then while this candle is made, the next candle created forms a gap that this box now fits into. And once it does, you have this other candle that goes in and closes out, technically underneath it. Step three, that's fair value gap. So we enter. And to enter, we would enter into sell. So now I'm logged into my, what do you call it? Demo trade account. If I raise this up, you can see, yeah, you can enter and trade that way. Or I like having the buttons right here. It just makes it a lot easier to maneuver. So I'm going to hit sell because I want to go down. I'm going to drag this stop loss, meaning how much money am I willing to lose. I'm going to put it all the way above. I like to put it all the way above the swing high that I have. It doesn't have to be that high, just a little bit high. But I like to put it above the swing high. And then my take profit, how much am I willing to make, or where do I think my price wants to go? I'm going to say it probably wants to go here, but realistically, there's a London low here, so I can also drag it down here. But let's just leave it here and say, okay, if it hits this line, we're going to make $955. And if it hits above my stop loss, then I'm going to lose 1,235. Now, this is not real money, so that's why we can do this like this. Otherwise, I'd be using a lot smaller sizes and probably keep a tighter stop loss. I wouldn't have it all the way up here. So once we play, then we look for the candles to see how it moves around. So the candle's moving around, kind of thinking, okay, is it going to go up? And then it, okay, that's highly unnecessary. So that's my that's my ring. So once it hits your take profit, it kicks you out of the trade. You've made your money. You set the line that this is where I want to go. Now, if you did this manually, and we only entered into one contract. So the way some people do is if the trade is going in your favor, moving and you're making money, but that you haven't hit your stop loss yet, and let's say you are entered into more than one contract, like let's say you're entered into three. Once this hits this red line, you can take two contracts out and keep that money. And then let's see what the other one does, because maybe it'll hit this last one, and then you can take your final wins and get out basically. So that's one trade that we did. And then the other trade, which I didn't really do because I was honestly half asleep. And price action was not great. It was not great. This was a Friday, so it didn't work for me, and I wasn't willing to wait that long, I think. And the way the candles looked, it wasn't cool. So here we have 9:30. That's when market opens. Now we look for price, and we look to see, is price going to take out, you know, up here, or is it going to take out key levels down here? So this is a London high, London high. I'm going to take these lines away because we're not using it for this trade. Okay. So, stay. All right. So Market opens on 9:30, and we're looking to see if it takes out any of these. Sometimes it takes it out in the pre-market, which is anywhere between like 8:30, 9:30, 8 o'clock to 9:30, any of that period there. So you can see that price took it out here. So in a way, I think I kind of waited to see if price took this out here. I'm gonna look for a fair value gap over here, and then I'm gonna look for break of structure, and then I'm gonna go down. Now I did have break of structure in the beginning, but I didn't have a fair value gap at all. I didn't see anyone that touched within it. So I kind of just watched this trade. Then I see the market went all the way down and took out these key levels and started reversing up. So when I see the market comes down, and what the term is, they sweep underneath these lows, meaning that there were other lows that were drawn here, like this Asia low. Let's see, Asia's lowest point was down here. London had a low down here, and it actually had, now I see it, relatively equal lows here, which is a nice draw on liquidity. Price is attracted to coming to these areas, but surpassing it and reversing back up, making people believe that price wants to keep going down, as that's its final destination. Really, it's a fake out. It's actually a swipe up, and price goes upward. So this was a form of liquidity. So if I'm looking through my little list here, step one accomplished. We see liquidity because price goes up above these lines that it just swept under. Then I'm looking for break of structure, and so break of structure became kind of difficult because, let's see, break of structure was right here, but the way the candles moved on this day wasn't awesome. It was just kind of ranging sort of before it finally took off, and it really didn't even take off well enough. So anyways, but if we're following the steps, we'll say break of structure happens right here. You could say it happens here, but it's actually technically break of structure doesn't happen until right here. I'm sorry. The reason why is because you're looking for a distinct swing high and swing low. So like this is a swing high, this is a swing high, swing high, swing low. The reason why is because the middle candle in between has a higher wick, and the one to the left and the one to the right are lower. And down here, the middle candle has a wick down, and the wick to the left and the wick to the right are lower. So this is considered like a swing high technically. So break of structure doesn't happen until up here. Meanwhile, you can notice that while this candle is coming up, you could form a gap right here, a square for this gap that you see down here. But there's no candle that enters into this space. Either way, you wait and see another gap right here. And so the gap right here, price comes in and reverses up. But the problem is break of structure happens, and there was just these dips and price has gone too low. But let's say liquidity plus time plus fair value gap, because you technically, if you play this properly, let's say price is coming, it goes all the way down, cool. It makes this first gap here, but no price touches it. Makes another gap here. So far, no price has touched it. So we're just going to keep watching. And then we see this break of structure. So we're like, okay, we expect price to keep going, create another fair value gap, or at least come down and touch this one. Let's play and see. Okay, so now you're like, okay, price has come down into this gap. Maybe you're on this candle or this candle, and you enter into this trade. So let's say you enter into this trade, and where is it? Now, because we're entering into a trade to go up, because remember, price comes down in liquidity, it reverses in the direction that we want. So we're going to go into buys. Yeah, we can just put one. And let's say buy. That's a terrible sound. Our stop loss is going to be underneath this swing low right here. And our take profit, let's just say we're aiming for this Asia high up here, and we press play. And see, this ranging is what's kind of frustrating. Price took. All right. Oops. Perfect. So, and I didn't even see how much money we made, but it hit our target and we made money. It didn't go below our stop loss. That was a nice move there. All right. I'm also going to put on here, I know I put step 1 is liquidity, but what I'm going to do is step 1 is actually right time. And then I'm going to do step 2 is liquidity, step 3, and then step 4. And then you enter into the trade. So I'm going to look and kind of back test, meaning I'm going to show you where else this has happened. I'm going to go down to 15-minute. And let's go on to Wednesday. So Wednesday, cool. So looking at Wednesday, before I can trade on Wednesday, I'm going to look on Tuesday and draw 1800. Mark out my Asia, my London session. So on Tuesday, let's go down to 1800 right here. I'm going to mark 2 a.m. That's the start of London session. And then I'm going to mark 9:30. That's New York session. And I'm going to mark 7 a.m. because that's what we're going to trade. 7 a.m. All right, so now I'm going to first do my whole mark sessions. London. Let's do Asia first. Asia. London. Then we're going to mark high and low in them. So remember, this is Asia session, London session, and 7 a.m. And this is 9:30 for 9:30 market on a Wednesday. So let me go down to the 5-minute. Yep. And I'm going to look to see the highest point and the lowest point in Asia and London. So I'm going to take this line. This is the highest price right here. And I'm going to make it red. And then the lowest price is probably, I can put it right here. Cool. Then I'm going to go to London, look for the highest price here. I don't know what that means. Oh, I clicked the wrong thing. Okay. And I'm going to make that blue. And the lowest point here, blue. I don't know what this orange line is. Okay, and then this is 7 a.m. Great. So now I'm going to look for price to come down or go up and tell me what it wants to do, pretty much. And I'm going to go down to the 1 minute. Actually, I need to get out of replay mode. And let's go to, okay, this is where we are. Cool. Wednesday, 7 a.m. So it's 6:55. And I'm looking for relatively equal highs, relatively equal lows to see what's going to happen with price. So here, we sort of had relatively equal highs. I'm going to use this here. So somewhere between here and here, it's not perfect, kind of close together, not perfect. We kind of have relatively equal lows down here. But when we press play, we look to see what price does. Press play. Okay. Price goes up, starts to reverse back down, sort of. It comes over this Asia high and starts to reverse back down. So the first flip over is liquidity. Then we enter into a break of structure right here. And then we also look at a fair value gap right here. So we probably would have been taken out of this trade. Let me hit sell. I gotta change that sound. Stop loss above here. Take profit. I would probably aim for this gap right here, or there's a nice gap right here. So let's see. Press play. Okay. All right. My goodness. I gotta change that sound. That's terrible. So it hits that take profit. And the reason why I set this as my take profit here is because of this gap. Price is always attracted to gaps and liquidity. So this is another drawn liquidity here. Price could come down here and want to reverse, but also this gap here and this gap here. I remember this trade wasn't impressive. Was this Wednesday? I guess we did Friday. I think I skipped Thursday. Did I skip Thursday? Either way, this is fine. Do Wednesday. Okay, so let me keep pressing play. Okay, see how it comes back down into this gap. So we could have made money right here. We could have kept into this trade and made it into this gap and made money just fine. So that actually worked. Once you hit your target, like where you plan on getting out, it's important to get out, because if you don't, because liquidity again is an area where price can reverse and go in the opposite direction, gaps are also the same. Once a price hits that gap, it has an opportunity to go back up. And so all the money that you made coming down here, you could end up losing all of that and going back up. But that is that replay. And then let's go into what's this Friday? Let's go into Wednesday. So that was Wednesday, 7 a.m. What are these orange lines? What is this? I don't recognize this line. So now that was 7 a.m. that we entered into that trade. We made money right there. Okay. Now let's look at 9:30. So essentially, again, we're looking for price to take out key levels and reverse back down. So just right out the gate, price is up here. But if I look to my left, price is already taken out Asia high, London high, Asia low. Price was underneath it. It came up and it's gone here. So in my mind, when I'm looking at waiting for price to market to open at 9:30, I'm hoping and thinking that since price has already moved like this, it's going to start coming down this way. Typically in the main market, you would expect price to come up and go down towards these lines, or come down and go up towards these lines. But in this case, it looks like it's already happened in the pre-market, which is what we kind of pay attention to. So at this point, we're going to press play, see how price moves. So in a way, I'll remember, because in my head I was like, well, price has come up and it's come down. It's not come over this. It's actually kind of stayed here and gone up. So is it possible that price just wanted to take this out and go up? We'll have to see. Let's look for confluences. Just merely looking at the chart right now, these candles are so tight and so close, I don't see a fair value gap at all that the price would want to come back to. And it's kind of the beginning of market, so I just sort of wait. Okay. So now this is giving me the impression that price has come up and it's coming down. That's evident here. So now I'm saying, okay, it looks like our direction, we're going to be looking for sells or puts, or we're expecting the market to be bearish here. So first off, we've gotten liquidity. I forget where my list is. Sorry, yeah. So we've got liquidity. That's one. We're at the right time, which is 9:30. So that's one. Liquidity, we've come up above these key levels and reversed back down during this 9:30 session. That's liquidity checked off. Now we're going to look for break of structure. Break of structure lets us know that, hey, this price is definitely going to be going down. There's no two ways about it. And right here, there are different places that you can see it. It's not perfect, but I see break of structure right here because this is the last swing low. Because if we're marking out swing highs and swing lows, this is a swing high, this is a swing high, this is a swing low. So I'm looking for where price is going to break underneath. And if price is going down, it's going to break under lows. If price is going up, it's going to break over highs. So I'm looking for a low to show me that price wants to go under. And how do I know price wants to go under? There's a candle that closes underneath this low. So that's break of structure. So we have time, we've got liquidity, we've got break of structure. Now we're going to look for fair value gap. We're going to take our box and look for where we can find the gap. We see a gap here, but no candle has touched it. We see a gap right here, and we see a candle has gone there. So once that candle comes out, or you have this other candle that's definitely black, we're going to hit sell. I gotta figure that out. We're gonna hit sell, and our stop loss, for me, your stop loss can be above this because this is technically a swing high, but for me, because it's the beginning of the market, it's 9:30, it's not good enough. I'm gonna put mine all the way up here. Don't pay attention too much to the numbers because obviously this is not how we'll start when we're trading, but it's important to know how to aim for things. So I put my take profit down here. Like, hey, if and when price hits this line, cool, I've made money and automatically take me out. So just to recap, we have 9:30, that's the right time. We've got liquidity, we've got break of structure, prices underneath this break of structure, and we have fair value gap. We've hit sell on our time, and we know that we are going down. That's the direction of price for us. We've already hit our key level, or we've already hit where we want to aim our price for where we should be taken out if it hits our profit, which would be down here, which is also a key level. This is London low. We know that price is attracted to these areas and gaps. So, and it's 9:30. Price can make this move very easily. So let's press play. All right, price makes that move, retracts, and actually continues to go down even further. So I'm showing you all of these to kind of show you, like, look, price does this. Price, if we're using the right, if I were using the right strategy and plan, you can see it do this almost every single time between 7 and 9:30. Now this works at 2 a.m. as well. And I actually did a trade on Thursday at 2 a.m. It's the same thing. It happened. But most people are not going to be awake at 2:30 in the morning. So that's not fun for me to talk about. Let's see. Thursday. Oh, I see. Did we do Thursday then? What was this? This was Wednesday. Okay. So let me erase this. So let me show you Thursday. And there's no other way to do this and get better at it without practicing it, drawing this on your chart, getting comfortable, marking your chart, labeling it, figuring out what works and what doesn't work. That's the only way to learn this. This took me months to learn from somebody because it was just so much and so overwhelming. I didn't really understand at first. I had to write notes, before I could finally feel comfortable getting in. All right. So now we're marking Wednesday. We're marking Wednesday starting at 1800 because we're going to be trading on Thursday. We traded Friday. We traded Wednesday. We're going to trade Thursday. So 1800, put that line. And 2 a.m., we put this line. It may not be perfect because of time. And then we're going to mark 7 a.m. here. And I'm going to mark 9:30 here. Cool. We're going to mark Asia high, which is going to be somewhere up here. We're going to change the color to red. And Asia low, lowest price down here. Then move over to London. up here, and we're going to make it blue. And mark, if I squeeze enough, I think my lowest is blue right there. Cool, cool, cool. This is 7 o'clock. Let's see what's going on. If price presents something for us, I'm going to hit replay, start new, right there. So at 7 o'clock, I'm going to look for equal highs, equal lows, and look for areas where price is going to want to reverse towards. So right off the gate, if I draw a trend line right here to right here, these are kind of relatively equal highs. And then somewhat over here, it's not perfect. We have like relatively equal lows. So let's see what price does at 7 a.m. when I hit play. Doesn't perfectly hit it. I want to see it kind of go up and above something. Okay. So here, price has gone up above this relatively equal highs and above this London high. Here, I wouldn't count it as much because technically it's still, though it's gone down, it's about the same height as this. It didn't go underneath this particular one, and it did not go underneath this particular one. You really want to see, it's obvious that it's ticked over the highest point. So here, so far, it's looking like it's giving us liquidity. We're at the right time because it's 7 o'clock that we're looking, and this is around 7:32. Now we're looking for fair value gap. We're looking for a break of structure. This might be our break of structure right here, but we don't have a fair value gap yet. So let's press play. No, it goes up even higher. Okay, pause that. Cool. So this is why we don't jump into a trade as well, because we want to see all of our confluences present. This was liquidity that we saw, but it looks like liquidity came down, then went back up, and then came down. Cool. That works out. That's not a problem. Okay. So now we know we're in liquidity. At least we feel like we are. This is fine. Now we look for break of structure and fair value gap. So we can say this is a break of structure, kind of, sort of, or this is, it's not really evident, and it's hard sometimes to see because it's clear that this is a swing high and a swing high, but swing lows are kind of difficult to see, maybe here and there. So either way, you can also say this is a break of structure right here, or you can say this is a break of structure here. I'm going to change the color. Purple. Yeah, maybe that makes a distinction. And then we're going to look for fair value gap. So I see a fair value gap right here, but no candle entering. So I'm going to wait. Then I see a fair value gap right here. And I see this candle enters. Okay. So on this candle, I'm going to enter into a sell. I'm going to bring my take profit maybe down to this line. I know it's going to hit over here. Just for safety, I'm going to put on this red line. And my stop loss, I'm going to put maybe above this gap or above this line here. And then I'm going to press play. Okay. So price hit that, I think it was $400 there. And that was that. That was the 8 o'clock. Now, let's look for, if I press play, let's look for 9:30. It's going to take too long. I'm going to get out of here. And we're going to look for 9:30 on a Wednesday. Okay, here we go. No, Wednesday. Somehow I guess I erased what happened on at 7 a.m. But that's fine. Okay, so let's say Wednesday 9:30. Wednesday 9:30, and let's start new. Before I can do that, I have to look for, let's see, 1800 on Tuesday, 2 a.m. on Wednesday. Okay, marking the high points here and the low points here. Sure. And marking high point here. We can say, actually, what time is this? 7 a.m. Yeah. And low point down here. Okay. 7 o'clock already happened. That was nice. We made money that way. And now it's, let me put this at 8 o'clock. I'm just marking 8 o'clock. I'm not saying it needs to be marked. Just so I know where I am, because I'm replaying and I'm getting confused. All right. I think we've already done this one. This is Wednesday. Either way, it's okay to practice. We've marked our sessions. We're looking at the right time, 9:30. I see price is already up here. I'm assuming just based on the way it's presented and there's key levels down here, that price is going to reverse down here. We're going to look for a fair value gap, and we're going to look for a break of structure. Price is going to enter in and out, and that's how we're going to take our trade. So let's see. Let's press play. Okay. Okay. So price does, I feel like we've already done this one, but it's all right. Price comes down. That's liquidity. Now we look for break of structure, which for me is right here because this looks like a swing low. I'm going to make that orange. And then I look for a fair value gap. I take a box and draw here. I don't see anything hit this box. Let me look for the next fair value gap. And I see this, and I see this is hit. Cool. I'm going to now sell. And I'm going to say my stop loss. I'm going to put it above this swing high. Maybe drag it up just a little bit high, but not by too much. And then I'm going to hit my take profit. I'm going to say, look, I might be feeling pretty froggy and end up down here and say, I think. So if you enter in with multiple contracts, like 3, 4, 5, I don't know if I've already said this, but you can get out at multiple places. You don't have to have one singular stop because the goal is to make money. You're not trying to play around with games. So as price is hopefully going to come down here, it's already hit this key level and reversed back up. So if it's going to come down, it's possible it's going to hit this again and hit this and maybe hit this point and 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 hit this point. These are multiple areas that price can go to ultimately get here. Most people like to put in multiple contracts and then they can take out partials, because let's say price never hits this area. What if it only comes up to right here, this line? Well, at least you've made $2,000. What if it doesn't even come up there? What if it just comes to this line? Well, at least you've made 1,700. What if it doesn't and it comes just right here? At least you've made 1,100. The goal is to make something. So if you're waiting for price to come all the way down and you don't take any partial profits in the process, and let's say price just like barely comes down. Let's say it comes down and then it goes back up because it's not ready to go all the way down here. Well, you could have taken money right here, right here, right here, or ultimately right here, and you didn't, with the expectation that you were thinking price was going to just come all the way down and flood in between. So we never know the idea of what price wants to do ultimately, but we have to be smart in the process by taking out partial profits. So let's see what happens here. Okay. I'm gonna have to change that thing. That is annoying. Well, anyways, price hit your take profit. That's great. You made some money there. So that's Wednesday. Let's see. Let's go to Monday. Yeah. So this is the same thing we do every single time. There's no like changing it around. You have to get better and better at it. marking out your time, seeing how price moves. There are obviously other confluences that like I introduced and I'm learning as well, but this step alone is great. And this week really price really respected itself and really did what it needed to do and made sense this whole week. It's not been that way as of January. I think from what I understand, January is like a terrible January and December holiday months are not great for the markets. Things are different. But I still wanted to trade, and so I entered in some trades, and January was just not a great month for me. But February has proven to be strong. December was surprisingly a good month for me. Um, Now, I know the last chart that I did, I used purple lines. It was just me trying to be quick, but I would still do the red. And again, I'm marking the highest point and the lowest point within this session. And then I'm moving on to the next session. I'm in the London session. I'm going to change those colors to blue. I think this might be, let's see. Yeah, I'll just mark that as my low right there. I might mark it up here. That might be okay. Yeah. And now this is 7 a.m. Let's say we want to trade at 7 a.m. We're looking for optimal entries that will allow us to trade at 7 a.m. So trying to figure out what my buy side looks like relatively equal highs. I mean, you can see these relatively equal highs somewhere if you really squint, or if you're really trying to force something. You could say, hey, these are kind of all, there's a point here, there's a point here, and there's a point here. There's also this Asia line and this London high, so I can use these as draws on liquidity. I can say price either is going to go up above this line and reverse, or it's going to go above this red line or blue line and reverse, or it's just going to go above this red line and reverse. Either way, it's the same concept. These three lines are important. The blue and the red hold a higher value than the yellow, but I can also prepare myself for price to go underneath. But what I'm learning too is that price may go underneath and then go, oh wait, I forgot to get that, and come back down. Okay, that's how we use all of our confluences. You have to have a break of structure and the liquidity, and it has to be the right time, and you have to have fair value gap. If you just have the liquidity and you enter and price decides it wants to do this, like, oh, I forgot, right here, you'll get stopped out and lose money. So let's replay. Oh, Lord. Let's see where we are. No, I'm just confused. I think it's Monday. I'm looking for Monday. Okay. Right. We're going to do a replay up to this 7 a.m. We have these relatively equal highs that we see here. We also have these relatively equal lows down here. But when you already see price up here, price is not confused. It's not going to randomly look for areas. It's always going to it's going to gravitate to areas that is closer to it. Now, is it going to go for this key level that's like, what did I say, 20 points above it? Or is it going to try and go for this key level right here that is, 40 points, I guess. Is that 40 points? 314 to 3. No, like 60 points or so, 50 points away. It's going to go for what's closer. But for drawing purposes, we can say there's this level here, maybe this level here too. I might just be overdoing it, probably right here. So let's look for what price does once 7 o'clock hits. Okay, so price immediately goes higher than these key levels, which makes sense. And then it even goes higher and takes out this Asia high. The question is it going to go up and take out London high and then reverse? Because right now there's no need for us to do anything. We're honestly just watching, sitting on our hands, waiting for actual liquidity to come through. Because even though price has gone up here, we don't have an official swing low. There's no official break of structure. There is this tiny fair value gap right? But I don't have a gray candle that's going down after. I actually have a green candle, then another green candle, another green candle, and just using like, thinking about how there's another key level up here, I would kind of wait until I have a definitive price action down. Okay, so price comes up, takes out this blue and starts to reverse. Okay, so price did what it wants to do. It officially took this price out and it started to come down. Okay, now I'm going to look for a swing low, which you could use this one here, or you could use this swing low down here technically. Then I'm looking for a fair value gap over here. I don't see a price, enter it. Look for the next one. I don't see a price, enter that. Look for a third one down here, and I see prices, enter that. So you either wait for another candle or you go ahead and enter into this. You have break of structure, you have fair value gap, you have the right time, and you have liquidity. So liquidity, time, break of structure, fair value gap. Needless to say, let's say we sell. And I'm going to put my stop loss above this take profit right here, somewhere above, because it's NASDAQ. And I'm going to slide down and say what's going to be my take profit or my stop loss. I'm going to put it above that and my stop loss, and maybe I'm just going to aim all the way for Asia. Let's see if it even happens, and we will press play. Okay, at least it hit my stop loss here. I mean, hit this area here, so I could have taken money out, because now price is going up. You're wondering, oh Lord, am I going to even make any money? Is it going to come back down? Am I in the negative? At least if you took out one of your contracts here, you've been fine. But let's see. My ultimate take profit or stop loss would be if it hits this area and goes above it. Oh, okay. So it definitely hit the stop loss here. I want to note this. So we made money, right? Okay. I want to note that there's a fair value gap up here that was never touched, and a fair value gap here that was never touched, and then a fair value gap here that got touched. Price will always go back and correct. See the gaps? It'll go back with this wick. Basically, it's like, imagine the wick was here and here. So it went in and then it went, okay, I'm ready to get to the area that I want to get to, which was ultimately here. So this was just like one whole week recap of using this exact same strategy. Very simple, once you practice it, oh Lord, once you practice it over and over again, it honestly becomes very comfortable and very familiar at some point. It's not as scary. It's a lot of steps, but honestly, I do find that if I'm going to be trading, I want to know what I'm doing. I don't want to enter into a trade like guessing or having a gut feeling or whatever that is. I definitely want to know what I'm doing. And so I use these steps to know, like, hey, you got to mark your sessions, you got to mark your high price, your low price within the sessions, mark your 7 a.m. And of course, you're using time, you're using liquidity, you're using break of structure, you're using fair value gap every single time. It doesn't fail. And if you have all of those and you set your stop loss, even if you lose money, it's not gonna be out of your reach. Even if you set your stop loss kind of tight and the price wicks at it, that's fine. It can wick at the stop loss, but then once it starts turning into your favor, you can enter into the trade and keep going. That's the cool thing about trading. You can lose $300 in 1 minute and then 2 minutes later enter back and make $1,000. There is no there are no rules. There's no rule that says you can't trade as much as you want. This week, I wanted to prove that you can trade as many times as you want in different sessions. And I traded at 7 a.m., I traded at 2 a.m., I traded at 9:30. I want to say every single day was profitable except for Friday. Friday gave like difficult pricing. I actually lost $300 that morning. But had I been awake enough, because I worked the whole week, had I been awake enough, I would have been able to enter into the trade and still made money. And the 300 would have been erased pretty much. So I wanted to give these examples. Hopefully this makes sense. And then, hopefully people are learning as well. I'm trying to do boot camp classes or crash courses to actually get people to feel comfortable entering into trades. That way it's not just me doing the replays. And then I'm also doing streaming where I'm streaming every single day. So you can actually see me enter into a trade. live and ask questions, and also practice getting into trades with demo fake money so you feel comfortable. Because the whole goal is to feel comfortable getting in and out, and then you can start using your own money. Before I end, I know I rushed. Oh Lord, I think I deleted that. Yeah, I know I rushed through showing my setup. So what I use TopStep. TopStep is a prop firm. Basically, with prop firms, I'm allowed to enter into a trade using a company's money without having them run like my credit score and social security number and all those things. So essentially, TopStep, you can trade with one of three different types of accounts. And now they've changed their entire system. Let's see. So I want to see if I can show you well, because I already have an account, it may not be clear. You can trade with their money. You can either trade with a $50,000 account, $100,000 account, or $150,000 account. The small one, which is a $50,000 account, is the best one to trade with because you can actually hit your goal a lot faster. So this is what happens. This company, TopStep, says, "Hey, yeah, you want to trade at $50,000? No problem. Pay us $50 per month until you pass the evaluation." So you pay them $50 one time. The evaluation says for the $50,000 account that you need to make $3,000 in trading, and you can't lose more than $2,000 in the process. So the way I trade and the way to pass that is to be consistent and do little by little. So maybe day one you make profit, like all those trades that we were taking on here. Maybe on Monday you made $300, Tuesday you made $400, for Wednesday you made $500, Thursday maybe you lost $100, Friday you made $600, and you go on to the next week, and you just keep accumulating and adding those on, and you're trading on this platform for TopStep. So once you pass that evaluation account, they'll say, "Hey, congratulations, you've passed the account. Now every money that you make, 50% of that goes into your own pocket." So now you're trading and trading. Let's say in that first week you make $1,500 on just that one account. You get 700 and something back, 750, whatever is half of $1,500. That's what you get back, and then that keeps happening until if you maintain the account, you don't blow it, meaning you don't lose more than you make. Then you get called into a live session where basically you are told that you can trade, and every money that you make, 100% of it goes to yours. Now, I've not done the live. I've only been able to make it to the payout, which I'm not mad at the payout because if I make enough, I can keep enough in my own pocket. So um, the first time that I passed this was in June. It actually took me a week and a half to pass this because when I tried passing it prior to having this strategy, it was not happening. It was not happening. I was losing money. I would blow an account, then I'd pay another $50, blow that account, pay another $50. And once I got the strategy down, after spending months writing it and practicing in the demo, once I started using actual money, it took me less than a week. It's not even an exaggeration. It took me less than a week and I passed. And that was back in June of 25. And they will give you this little certificate that has your name and, hey, you passed, blah, 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 which is cute. And then after that, I was able to get my first payout, which is not on here because they've changed their platform since that June. It was $2,457, and payout means I made $5,000 and I request half of that, so 24.5 or something like that went into my account, and I was so excited because I was like, hey, this money, this $2,400 was made by just me using $50 to open up this prop firm. So of course I'm gonna continue this process. They have very they have very strict drawdown rules, and so that's why, like one of the trades that I showed you on here, price went all the way up, almost close to the tick before it reversed. If we had chosen this account and traded on this account on a micro, because right now this is mini, if we chose a micro, then it wouldn't have been as terrible a drawdown. So we have to be very particular about how we trade when we're trading prop firms because their rules are a lot more strict. Like they said, you can't lose more than $2,000 in a trading session. And sometimes when the trade is not going in your favor, you can be negative $1,000, a negative $1,500, negative $2,000. And even though price ends up going in your direction, just that price just you being in that negative can cause you to lose an account. The way you get away from that is actually not trading mini, but you trade micro. So these two accounts, the Nasdaq and the ES or the S&P, are actually the mini version. You can see that it says mini. Now mini sounds like it's small, like it doesn't give you much money, but as you could see when we were doing the demo, it's actually quite big. It's 2,000, 3,000, 4,000, depending on, and that was only just with one contract. Like if we had put in more contracts, we would have made $10,000, $20,000 demoing that. But if we select micro, which is going to be, instead of NQ, it's going to be MNQ right here. And instead of MES, it's going to be MES. Now let's say we want to trade on those accounts. I'm going to hit replay here. And let's say, hey, I want to enter into a trade and I want to sell. So this is a micro mini. I want to sell. And I'm going to put my stop loss here because I'm expecting price to go all the way down here. Let's put it down and let's hit play. I wish I didn't do it that quickly. Let me restart, replay, so that you can see. Sell. Yes. So if I put my take profit up here, and I put, excuse me, my stop loss up here. See how it's smaller? $200. If I put my take profit up here, down here, 593. So if my money goes above this line, it's not going to completely blow me out because I'm dealing with micros. It's a lot smaller. Even if I aim down here, it's I'm 806. That's awesome. It's a lot smaller earnings versus if I was doing the same thing on the mini, and let's say I'm looking at let's say I'm looking at this account over here. Start new. Okay, and I'm ready to, I said I think price is going to go down. Just one contract. If I hit sell and I put my stop loss above here, and let's say I want to hit my take profit, just drawing the take profit, you're already in $4,000 profit. But if you lose, you're in 5,000, and this trade would not work if with prop firms because you're already out. You cannot lose more than 2,000, and nobody wants to put you. You don't want to always put every trade like I don't want to lose more than 2,000. You kind of want to say I don't want to lose more than 300, 500 in a trade. Just kind of keep it really tight. But I really want to make this large amount of money. It's not always realistic in that sense. But see how the same size here, what's in the, wherever the micro was only 800 or 400. Here it's about 4,000. So your risk to reward is a huge measure of how you make money. But when you're doing prop firms, you want to be restricted. You want to use micro. You don't want to use mini. You want to be a little bit more controlled. The good thing is that the price moves the same with the micro and the mini, so you don't have to. I don't download the micro chart really. I just still use the mini even if I'm trading on micros because it's the same chart. It's just a smaller size, smaller position. So sometimes when I trade with micros, I'm like, oh man, that trade moves so well. If it was a mini, I would have made 2K or 3K, but it's a micro, so I made $500, $300 or something, and that's okay when you're dealing with prop firms. Now, prop firms are great. Again, they're restricted. I think the goal with prop firms that I like is that you can use this leverage, because again, I've mentioned that what makes futures great is that there's a lot more volume of money in it. This move here can be $10,000 without having to put much into it, just one contract. But if I was trading in options, I'd have to put like 100 contracts just to get that $10, $10,000 move. So there's not much liquidity. I mean, there's so much more liquidity in futures. Like there's a lot more volume, a lot more money returned to you. But in order for you to benefit from it, you have to put in a lot of money yourself if you're doing your own live account. Now I have my own live account because, if you're going to trade and really see money, it's good to just open up your own account. I started off with, what I've done is I started off with like 1,500. If I make $1,000, I just move the $1,000 to my account and then I trade some more. Here I lost some and made some. Oh, so I don't know how to calculate any of that. Right now I'm at 1.9. I use the MES and the MNQ. I keep these here, but I don't think that this volume that I have is comfortable enough to enter into these types of trades. So I enter into MNQ and MES. What's great about them too is that you don't have to just do one contract. You can enter into an MES or MNQ, whichever one. And if you're entering into a trade, instead of entering into one, you can do five. You can do five contracts. Okay, and then if you hit your replay, if you hit your replay right here, and let's say you want to sell, and you put your stop loss above here, and your take profit is down here. See, that's 3,000 bucks with five contracts on the micro. So you can still make quite a bit of money as long as you add enough contracts. I am changing that sound immediately. I don't even know how. I think I did that on like accidentally. Yeah, I'm not doing that. I think the chirping was fine. Yeah, so that's pretty much it. I wanted to show you guys examples. Obviously, the best way to do this is really to join live stream and understand how to get in and out of trades regularly, and then make it a consistent thing that you do. Again, I wanted to show that you can trade at 9:30 Eastern. You can trade at 7. You can also do 8s, but I was skipping 8 this whole week because there was 8:30 news like almost Tuesday through Friday, 8:30 news, and I don't like to trade at news. So I was going to explain this as well, and I forgot. So, Forex Factory, I mentioned that this is free. This is where we get our news and our data. We don't need to interpret anything about this. All we need to know is that when I see a red folder next to a USD, I need to be mindful not to enter into that trade. That's all. So, when I scroll down and I'm looking at Monday next week, I don't see any USD news that's red folder. All the red folders are New Zealand and Canada. I don't know what they've got going on. Now we go over to Wednesday, and I see that there is 9:15, or excuse me, there's 2 p.m. USD red folder news, FOMC meetings. They're going to talk about rate cuts or interest rates and blah, blah, blah. Whatever trade you're in, you either need to enter into the trade before this news or enter into the trade after this news. And that's all we need to know about it. That's the only thing that I really use this for. Sometimes I try to interpret the data based on the actual versus forecast, but I realize it doesn't really matter because then I'm trying to trade like a fundamentalist and I don't really understand the economics of the world. All I need to understand are the way the candles move and what they mean in the price. But if market is, let's see, for example, there was actually a trade. There was news at like 8:30 on one day. I forgot what day it was. There was news. Anyways, there was news on a day, and I can't remember what day it was. It was at 8:30 news. I think it was either Wednesday or Tuesday. And if you find yourself trading on that day, when the news releases, the candle, instead of it being its typical average size, will all of a sudden become this random, super long, out of nowhere. It can take you out of a trade. It can make you lose a lot of money. It's just such an erratic price candle. And the reason why you don't want to trade on the time where you see price come out is because you don't know what's going to be released. You don't know how price is going to respond to the data that comes out about this news. So you want to stay away from it. People like to trade after it because when they see this impact and they feel like it gives them opportunity to enter into a trade, that's fine. For me, our time is always going to be 9:30 in the morning and 7 a.m. So I'm never looking to take a trade at 2 or 2:30, unless, of course, there's also a 1:30 time frame that you can trade. But when I look at this red folder, I usually try to stay away because I don't know what the markets are going to do. Um, but yeah, that's pretty simple. It's nothing complex. There are other factors to this, but it doesn't mean anything as long as you follow your steps, understand what price is doing each time, and you just follow your steps. You mark the charts, You make sure your lines make sense. You look for that liquidity. You have to look for that liquidity before you look for break of structure and for value gap. You have to do that. If you don't do that, then you're just trading blind. It doesn't work the same way. And let's see, I was going to say something else to you. You could also look at liquidity in two different ways, in two different angles. Like, let's say I draw this line and price was at its highest over here at some point. This was like on a Friday. Oh, okay, yeah. Price was, and let's say price does this thing, liquidity, where it comes up, it's 9:30, and it comes back down. Great. That's exactly what we want. We widen up and we look for fair value gap. Let's see if we even find one here. I was trying to look for an example. Let's say, well, no, this isn't it. What's it? Find a good example where you can actually take a trade down and you can take a trade up. So okay, let's pretend that this is 9 a.m. because this happens a lot. Let's say we find price comes up above this high. Let's say it comes above this high. And let's say price goes over and down. Cool. That's a fair value gap right there. I mean, excuse me, that's liquidity right there. We're going to look for fair value gap right here. And then we're going to look for, excuse me, break of structure right here. We're going to look for a fair value gap, which would be like right here. Then we enter into this trade and we take it down. Let's just do it. We're going to enter into a sell. For some reason, it's rejected my order. Huh, okay. So we entered into a trade. We've got a fair value gap, liquidity, and a break of structure. We enter into this trade and we make our money right here. We could essentially say, okay, this is another form of liquidity. Let's look to our left and see, okay, you know what? It took out what was this low. This is a low down here. This low, you know, price came down and reversed back up. Again, we could say these are relatively equal lows. This is not perfect, but I'm trying to give you the idea that you can ultimately make your money going down. You can say, okay, that's a liquidity draw. I'm going to look for a fair value gap now. Let's look for a fair value gap. I don't think that one. Yeah, let's take this fair value gap right here. We had our break of structure right here. Fair value gap was put right here. And we take this back up. And we aim for either right here or this last high or this high or this high or this high. We can make money back in the same direction. And then we can come up here and say, oh, price came up above this. It did a nice flip down. Okay, let's look for break of structure right here. Let's look for fair value gap, which is, I'm not finding it. Let's say, looking for a fair value gap. I don't see a fair value gap here. Well, let's say you didn't take this one then. You left it. And then you see price comes underneath this low. Sweeps back up. And I like how this is a very nice break green candle. We can see that this is now a new break of structure. There's a breaker structure right here. This is a nice big green candle, which is a nice bonus when you see that. I see this candle entered here. Take my trade. Take it all the way up here. That would be my aim. And then, oh look, price went over here, reversed. That's liquidity. Now I'm going to look for a break of structure. I see it right here. Now I'm going to look for fair value gap. I don't know. I don't see a fair value gap. I can draw this here. Okay. No, that would have been invalidated. It wouldn't have made any money. Or you would have said, look, I have liquidity. I have break of structure. And if it wasn't the right time, you could say, okay, I'm just going to take the trade. Maybe to be safe, I'll take it down here, not knowing that obviously if price went down a lot lower and it aimed at this fair value gap that was over here that hadn't been filled. So needless to say, I think that was 1 trade, 2 trade, this one didn't work, 3 trade, this one didn't work. So you can take multiple trades here and just say, hey, I'm done. You can make some thousands here if you wanted to, and then say, okay, I'm done for the day. And this was done at 2 a.m., which is another good trading time. 2, 3 a.m. If you were awake, trade during that time, and then you don't have to worry about trading at 9:30 in the morning. So I hope this was helpful to anybody that's interested in trading. If you have any questions, concerns, want to do a 1-hour session, it's free. Or if you're interested in joining like a 2 to 3 week boot camp where we do the same thing and go over examples, go more in depth, and you get to stream with me live every day, please let me know. I'm just here to help.